I mean, who knows where the markets will go? That's why we're here, Keith, and specifically you, because you focus on earnings and you always have focused on good quality companies. And when you see them at a discount, you've scooped them up. What were you buying yesterday compared to what you're buying today?
Well, that's a really interesting question. So we have a broad shopping list, but it's very tightly focused on very specific names. So yesterday, I purchased Apple, I purchased Microsoft, and I purchased Palantir because they all got beaten to a pulp, and I thought that was overdone given the great numbers, the great earnings, the great things that they're doing.
So you bought those, and anything today, or are you just holding your fire?
Today, I'm just being real quiet. My experience over the last 45 years has been when you have big, sharp drops like that, let the computers work it out. Let the short-term traders work it out. Let the noise settle, because when it does, you often get very clear signals. The market is the only store on earth, Liz, where people fear a sale.
That is very true. We've heard that before. They put up the sale sign down on the New York Stock Exchange and everybody runs away. Compared to Walmart,
exactly.
Compared to Gucci, no matter what end of the spectrum you're on. Jack, when you look at volatility, for example, this week alone, I mean, today we've got the VIX down about, I believe, 5%, 5.25%, but week to date, it's up 8%. Then you can see that month to date, down 5%. I mean, month to date, here we are, first day of November, duh, Liz. Quarter to date, though, up 30%. And we do see volatility. It's not a quiet picture when you stretch it out. So how do you invest around that?
So, and it's not just equity volatility. You look at the MOVE index, which captures implied volatility for bonds. So you've seen a big spike there as well. So it's really kind of idea of, and we've seen this throughout this year. I mean, it's been fascinating that each quarter we have sort of a different flavor. Hard landing, soft landing, no landing. This summer it was kind of, hey, we're going to get a hard landing. Fed had to cut 50 basis points. We kind of pivoted to sort of a no landing. GDP, I mean, the economy's doing well. The consumer's doing well. I think next year is going to be a better environment for global growth, and we can talk about the opportunities there. But volatility is going to stick around until we get clarity now on the outcome of the election. I mean, I'm not telling you anything we don't already know.
Yeah, so it looks like there will be, at least according to the Fed Funds Futures, a 25 basis point cut next Thursday when it's announced by the Fed. When you have global growth, though, Keith, doesn't that mean a little bit of inflation? If there's growth, there's more demand, and that means the supply sometimes gets a little thin, and then the prices go up. When you're looking at the prices of individual stocks, you said yesterday you had bought Apple, among other names. Look at Chevron and ExxonMobil today. You call it dinosaur juice, right? The dinosaur juice makers. And you see that those two names did very, very well during earnings. What does that tell you about the energy sector going forward?
Well, it tells me two things. Number one, people have been distracted by AI. And, I would argue that's probably a good thing. But it also speaks to the fact that many people have left companies making must-have products and services on the sidelines. And one of my mentors many years ago taught me when somebody puts money on the floor in the corner of the room, you just walk over and pick it up. They've got great dividends. They've returned record amounts to their shareholders. They've got a lifetime supply of dinosaur juice that is going to be with us for decades, regardless of a fungible substitute, either EV, other forms of energy, within the next few years.
Yeah. So, Keith, you love investing, don't you? It's great to see that energy around it.
I do. This is the greatest game on the planet because you can find great companies, put your money to work, and then when you do enough of that, your money starts working for you. I mean, what a great deal.
Jack, very quickly, starting next week, what will you be watching the most ahead of the Fed when it comes to particular sectors?
So, okay, next week is tough. I mean, the Fed, I actually don't think is going to be as big deal. We know they're going to go 25 this time. We'll have to see what happens in December. I hate to say it, it's really about just the election and actually the volatility associated with it, because if we get a spike up 10-year treasuries to 4.5, north of 4.5, I think you're supposed to be buying them.
Jack McIntyre, Keith Fitz-Gerald. Yes, that's right. Strap yourselves in, everybody, for next week. It's going to be a wild one. Thank you so much.